Thanks, everybody. It's really a pleasure to be here. I'm Nick Van Self, the head of digital infrastructure at EY Parthenon. My quick background is I started building data center models, like Excel models, not actual models, back in 1999, trying to figure out where data centers really needed to go in the US as part of an investment opportunity I was working on. Later started my own consulting firm called CMA Strategy, built that to about 100 people. We sold it to EY in October of 2021. And now I look after the digital infrastructure business. We really focus on data centers, fiber, towers, and help operators and investors with commercial strategy, commercial diligence, technical diligence, and the like. So thanks for having us. We're going to focus on all things digital infrastructure, really around sort of the trends, the constraints that exist for growth, and what are the sort of financing and capital opportunities to go out and continue the expansion. So I'd love for each of the panelists to just spend one quick second introducing themselves and what their business is, where they focus geographically, and then we can dive into things. Want to start?
Hello everybody, Alessandro Lombardi. We run Lea Digital in Brazil. It's a company operating 9 aggregation data centers in the country. And the capital structure is a local investment firm together with Goldman Sachs.
Hi everybody, I'm Bruno Lopez. I'm President Group CEO of STT GDC, which closer to home here, we own a majority in Virtus, who is London, as UK, as well as a Germany footprint. But in Asia, we have across 11 countries where we basically have a strong position in growing our footprint since when we first started around 10 years ago. Thank you.
Good morning, everybody. My name is Olivier Michelet. I am the second guy on the left side. So I'm running a company called Data4, which is a pan-European data center firm with an HQ in Paris. We have 34 data centers. Q1 this year, we have secured 1 gigawatt of power across Europe. And last year, we did a very nice transaction with Brookfield, which was the largest LBO in France and one of the largest in Europe.
Good morning, everyone. My name is Satyada Huja. I'm the president of a firm called Tillman Global Holdings. We're a private investment firm focused on digital infrastructure and energy transition. We've been building businesses in digital infrastructure for about 15 years. We've previously owned the 3rd largest cell tower company in Africa, the largest tower company in Myanmar. Currently, we've got 5 platforms that we operate. In the US, we own the 2nd largest private cell tower company, we're building one of the largest open access fiber to the home businesses. We have an in-building platform, a construction services and financing business, and an EV charging infrastructure platform.
Excellent, thanks. So as we look out, when we do our work at EY, we really see AI as a really significant opportunity. And across the broader EY, we use AI in our day-to-day jobs, like with how we audit companies and detect fraud and things like that. We also help enterprises implement AI in their operations. And so we really get to see it firsthand as we implement it and how real it is and the real benefits of it. We also get to see the ROI that's generated by the companies who invest in GPUs, and we're seeing over 50% IRR for investment in GPUs, investment in AI, and it really sort of highlights the need for immediate capacity, because if you don't have capacity, you can't deploy those services, you can't make money, you can't get that 50% IRR. At the same time, we're seeing sort of like an inherent governor that's built into it. The latest generation of chipsets that are coming out from NVIDIA and others are air-cooled. And part of the reason is there's just not liquid cooling infrastructure that's available to handle those. And so, we sort of think about the world against this backdrop and really start to, understand that the folks in this room and on this panel are really building a once-in-a-generation set of infrastructure that's going to enable all of these applications and services that were talked about by the previous speaker. And so as we look out, the things that sort of our investor clients and our operator clients are really focused on is around, how real is this AI, and when is it going to come to the various geographies, both in terms of infrastructure investment and adoption. Second big thing is what happens at contract expiry, whether it's in building, whether it's in data centers, whether it's wholesale fiber networks. Like, what happens at that contract expiry point, and how do we get clarity and confidence that this infrastructure is really fit for purpose for the long term? And so with that in mind, maybe I'll ask Bruno, if you can, maybe comment on how you're seeing AI impact your businesses, and really touch, if you can, on just sort of the trends that you're seeing with respect to leasing, pricing, technical requirements, and the evolution of those in this very short amount of time that AI has been at the forefront.
Yeah, I think, firstly, I echo a lot of the thought processes you had. The demand's there, and the demand's growing. We may feel that, is it really real demand or not? I think the fact of the matter, even in places in Asia, we're seeing that demand come true, and it's real. So the question really is, what's it doing to our ability to deliver to those demands? Because if we don't, you can't achieve those 50% IRRs that we're talking about. And I think the challenge that we have is that the pricing hasn't caught up yet to what's required. Power availability is not there. And I think these are some of the big challenges that we are faced on the ground, real time, and pretty much in every geography that we're in. Governments are finding it impossible to deliver to our demands. We've got some markets in Malaysia, for example, who the requirement for data center providers to the grid is to the tune of 11, 12 gigawatts of capacity over the next 3 to 5 years. And the entire capacity for nearby Singapore in terms of actual for the entire country is about 13 to 14 gigawatts. So the amount that is being asked of the infrastructure to deliver is not real. It cannot be delivered. And to Huck's point earlier, right, it's a fundamental issue that we have to face up to. And as data center providers, I think for us to have the social license to continue to deliver this, we need to deal with it. And how we deal with it has to be a combination of some of the things we talked about. New ways of delivering capacity in a very focused, directed way, working with our customers that when they ask for capacity in a geography, please don't ask 5 different providers to give me 200 megawatts of capacity, and all these 5 go to the grid and say, please give me, and the grid says, I need to give 1 gigawatt to these 5 guys who want to deliver to Microsoft or Amazon or Google or whoever, right? They can't give you that capacity. So some governments give you promises, and the grids give you promises that they can't deliver. So I think we have to be very careful that we don't get caught up with trying to address this huge opportunity and not be aware of whether we can actually deliver it. And I think this is an important issue for us to engage both our customers as well as our providers and our partners here and everyone here, that because if we don't solve this problem, or at least work towards addressing it, and how do we do that, right? Be engaging these governments and be more focused in working through the capacity that's actually needed. I think we have to bring technology to bear in the way we build and the way we set out new capacity. We have to look at addressing it in ways that potentially would have to change the way we actually contract today and lease today with our customers. How utilization is measured in the data center. Do we bring ASHRAE standards and use those? A lot of customers don't like to do that, but maybe we have to challenge that. So there's a combination of effort that needs to happen for this to be able to deliver to this new wave that we are seeing. And I'll stop there for a minute.
Anybody else want to comment on that before we go to the next one?
I think it's the example given by Bruno about the 1 gig for 200 meg demand is a very good example. I would add as well that you have speculation. So as well you have new entrants, new investors, basically that are as well buying lands, putting power, expecting basically that it will be taken by the market. And if you add that, you have basically power cos or grid power cos, basically that are very constrained and can't deliver, as you said, these powers. So that's something that needs to be addressed. And especially, I'm a European guy, so especially in Europe, because it makes, we will talk about the constraint, I believe, but that makes some constraint on delivering the power for the future.
Great, thank you. Alessandro, how are you seeing AI manifest itself in AI, if at all, at the edge? And what's your expectation for timing of demand, timing for adoption in that market?
Nicholas, first of all, I'd like to comment on Bruno's remark. With my Latin American perspective, I have to tell you that in Chile, in Santiago, Chile, exactly what happened. 4 players were there to ask 100 megawatt each. 3 was approved, the other 2 was not, and who won was the one who was not approved. So it was 2 years delay for the customers at the very end, a mess because of that. I also have to say that the Brazilian market, the Latin American market, but especially Brazil, is becoming mature in terms of data center capacity. But we have, the local government has the exact opposite problem as yours. There's too much energy. The government has invested in the last 20 years in renewables, and the matrix was already hydro-oriented. So now you have a 90% renewable matrix with probably 60% capacity utilized. So the government has the problem, how do we stimulate demand for energy? Because the local market is not able. So artificial intelligence can be a solution to that. So it's interesting, which is another part of the world, but is a literally opposite kind of problem. From our perspective, we are running aggregation edge sites. So there are 9 sites, they're typical 5 to 10 meg each. And what's happening is that the clients are requesting significantly higher type of deployments, even at the edge. And I'm not talking about far edge, but it's like tier 2 market. So in Latin America, tier 2 market is still underdeveloped. It's not like Dallas in the United States, for example. So the first applications, inference applications, are already there. So you see players like Meta, they are put on their edge cloud POPs. They're putting a layer of AI, small one, 0.5 meg, but it's already there. And for us, it's basically the same kind of deployment you have for the cloud. It's a kind of new layer of the cloud. It's kind of. And, but also at the core, they're doing the same. You see AWS, Microsoft, they started to implement AI inference in Brazil with sizes ranging from 10 to 30 meg. And that is being done in sites where the cloud is already deployed. So again, it's a new layer of the cloud. So what we see is that basically these 60, 80, 100 kilowatt per rack densities are not yet there. We need to think our infrastructure in order to be able to get there in the next 15, 20 years, because our data centers are built to last at least 20 years. So we need to think, but they're not yet there. And what we're seeing in Brazil right now is this inference kind of sites. They have densities very similar to the high range of the cloud densities. So rarely up to 30, rarely. It's more 15 to 20 for AI inference, I would say.
Thank you. Maybe Satya, you can talk a little bit about how you're seeing AI and even landlords, like in their willingness to invest in the networks in building as you're deploying your in-building networks across your digital cities business. and how you think that evolves over time.
Sure. So I think there's two types of deployments and two types of landlords. There's sort of enterprises who are application driven, and so in those instances you do see you see venue owners saying, look, I believe that I'll have to provide an edge type of solution or a security solution or something that enhances their business that they're offering in their kind of four walls. In those deployments, I think sort of AI is more relevant. Sort of, I think the edge opportunity, the micro edge type of opportunity is probably real, but it's really being pulled by the enterprise or by the carrier. But at least in the context of the U.S. and Europe, where we spend time in building, a large part of the deployments are really just focused on either upgrading kind of legacy 3G or 4G networks to 5G and or providing a base level of carrier or MNO grade connectivity. And it's become very much a table stakes utility that landlords have to provide just to satisfy whatever needs are happening inside their building. So I don't think I think there was maybe a sort of a pie in the sky idea that, you know, DAS plus edge were going to be a solution that was going to be taken up very, very quickly. I don't think that's happening. I don't think the use case is there today. The demand's not there. But venue owners and enterprises are getting much more sophisticated and are actually the ones kind of pulling. It's sort of a demand-driven approach rather than sort of carriers or hyperscalers pushing it. So I think we're seeing it, but it's still the kind of brick and mortar, can I have carrier grade deployments? And ultimately it's going to be driven by verticals. So I think in instances like healthcare or in sports stadiums or even in gaming and hospitality, we're seeing a lot more application-driven demand. But in commercial real estate, for example, it's very much focused on kind of base case 5G connectivity.
Thank you for that. So in the U.S., you know, Northern Virginia used to just be a black hole. It could absorb any demand for data centers that you threw at it. And really, for the first time in history, the utility there, Dominion, had basically put a stop on all data center deployments. And there's a lot of what was talked about here, where 5 people come with the same, you know, 200 megawatt ask. The utility thinks there's a gigawatt of capacity that's needed. Turns out it's only 200. And so the utilities are starting to see, like, hey, maybe we need to make sure this stuff is real before we start investing behind it. Or maybe we start making folks take and pay for the power that they're telling us they need and pay for it in advance before they even start using it. And so we're really starting to see a retrenchment of utilities in the US and in Europe, as well as overall energy constraints. And it's really the first time we're starting to see that at the same time that AI demand is exploding. And so you've got this confluence of constraints and demand happening at the same time. It'd be really great, maybe Olivier, if you could start with just how you're seeing some of these constraints manifest themselves and what strategies you're using to try to deal with them, both in your existing markets for adding capacity on your campuses and how you're approaching new markets.
Well, thanks for this very good question, actually. Well, to make it simple, when you want to build a large data center campus, you need 3 basic ingredients. Okay, you need land, you need power, and you need the authorizations. And then you can build, basically. In Europe, land, it's more and more complex to find. There is a zero net artificialization, where basically, you know, doing greenfield data center project is almost impossible. So, defining, you know, you need to find like industrial sites or old industrial sites where you can build data center. For the authorizations, when you take the environmental authorizations, it's very, very complex. So you need to basically work in advance, explain, but basically the elected people basically do pretty much what the citizens are saying, and citizens are quite skeptical when it comes to data center. And there is a little bit of schizophrenia here, because on one side they don't want data center in their backyard, but at the same time they use more and more digital. So, but it's our job. It's our job basically to explain why it's super critical to have data centers in each market. Okay, and when it comes to power, that's a big, I would say, as you mentioned, I totally agree, and it's true in Europe, the issue is not coming from the production. The issue is coming from the grid, actually. The grid is constrained. And so basically, what we're doing, for example, is basically we are making more stock. So you need basically to anticipate, because it used to take 2 to 3 years to develop a data center campus. Now it's between 5 to 7 years to develop a large data center campus. So the projects you're working in will be live by 2030. So that's why it's important to basically to anticipate, increase the stock, and it means for the investors as well to accept there is a land carry, so basically to absorb this future demand for the future.
You tell me how to do that. How to convince the investor to wait 5 years.
No, I think Olivier is spot on. I think that issue is not just in Europe. I think it's quite across a lot of the geographies, except for the comfortable situation they have in some parts of South America, Latin America. I think the real issue is that I go back to the issue of social license that we need to have to operate. I think that we need to take that seriously. What must we do to do that? We think that we need to engage governments and the community to appreciate and share with them why this is important and why we are actually not the bad guy. Data centers are seen as the carbon emitters and the devil, in some places, not in my backyard, etc. kind of framework, right? But I think our engagement with the community and governments have to be a lot higher and we need to educate. We need to work with governments to appreciate that whatever that's the gap today is not just caused by us. It's past the community. The community is schizophrenic. They want more capacity. AI is supposed to help. Every country that we know in Asia and everywhere says we need to go down the digitalization path and use AI. Well, mates, we need data centers. If you don't, you can't go down this path. You cannot fop off that commitment to a neighboring country. That you need to take it on yourself. So what must we do? And I think I give you a good example of the engagement that we've been doing with. We're headquartered in Singapore, so we had a lot of engagement. And Singapore has got a moratorium, no data center capacity. The only one that was given out in the last 3 years was 4 tranches of 20 megawatts in the last 3 years. So, but they've realized that actually there's a problem. But the grid is what they cannot deliver. They cannot deliver any more capacity. So what they've done is to take a longer term view on engaging the data center community as well as the key actors in the whole, and work out what we need to change. So there's very clear plans that in the next 3, 5, 10 years, how they're going to make that, improve the grid, make that capacity available, and be more rigorous how that capacity, data center capacity is allocated. And they've been engaging, and we've been engaging the government on that. And across that, they appreciate that the decisions they made on the moratorium is backfiring to some extent, because neighboring countries are taking advantage of it, who may not have the same lens, but are prepared to make that call and let the problem solve itself in the future. But that's something that we need to do to continue to be able to do the job we want to do and the business we want to do. And that requires more responsibility on our part as well. Let's not throw that to somebody else to do, because it will hurt us.
Just to add, I think you're right. We need to work with the governments and to explain why we need, of course, data centers. But I think the AI is really supporting the data center industry, because now the governments understand that AI is not GPU. AI is from GPUs to the data centers. So they understand that if they want to be an AI nation, then if they don't want to be a second-class country and basically be a leader in AI, then obviously they will need to have data centers. And I say that because actually in France we received a report actually done by different scientists about the AI report, how France could be an AI nation. And it was for the first time written that if we want to be an AI nation, we need to have data centers. And not small data centers, but large-scale data centers. So I think AI is a good supporter of data center development.
Thank you. It'd be great if folks could comment on maybe any labor constraints that you're seeing, or if you're seeing those easing, as well as equipment supply constraints. We've noticed across our clients, pretty big drop in lead times for equipment. Those are starting to ease up. I'd be interested to hear the panel comment on those items and trends.
I think 2024 has seen a lot of easing off the constraints on the labor side. So at least in construction, on the as it relates to general contractors, I think there was a lot of pressure second half of 2022, a bit of 2023, and these are long lead cycle projects, so you have a lot of visibility over the next 12 to 24 months. We haven't seen that same amount of pressure on the labor portion of the supply chain this year, and we don't really anticipate it into next year. Now, I think on materials, it depends. So in our businesses where we're buying a lot of steel, buying a lot of glass, a lot of fiber, a lot of electronics, again, because you provide a lot of visibility to your suppliers, and if you're a big buyer, I think you can get around some of those constraints. But we've seen it in the industry. Just the one thing I wanted to say around how it relates to labor and kind of regulators. So when we engage with regulators, particularly in emerging markets, there is a desire to bring more data center capacity, but the issue is the number of jobs that project will create. And I think that the challenge is when you're just going in and saying, I will build a data center, you're maybe providing thousands of construction jobs, but that's a discrete amount of time, a discrete project. I think with AI, you can work with the regulators to create more high-skilled, high-value type of capabilities in the market. And so I think when we speak with regulators in Asia or in Africa, and even in some instances in parts of Europe, they're very open to incentivizing further investment in data center capacity to the extent you can bring, I think, higher skilled labor into the market, higher skilled capabilities.
Yeah, well, constraint on human resources is, of course, finding talents is very complex, and so therefore it's very important to work with universities, obviously, and make sure that basically we have the resources for now and the future. One challenge I see is more on the supply chain, on the equipment side. Everybody wants generators, everybody wants UPS, everybody wants all the major equipments of the data centers, all right? And so there is a constraint on the supply chain, on the equipment side, and that's to be taken in consideration, because if you speak to the large equipment providers, they will serve first their largest customers. So again, it's important to give visibility, and as well to take some options in the future for these manufacturers consider you and deliver the equipment.
Yeah, I'll add that I think the labor issue is there for different geographies, different maturity levels of these countries. I think one of the solutions that we found quite interesting is to look at parallel industries and leverage that as well. We looked at other mission critical industries that have capability, offshore and marine, oil and gas, which it's an interesting way to draw some capability. And the other thing that we found quite interesting is look at the military to find people on the ops side, because their process, focus, operational, standard operating process kind of mentality is very helpful when we deploy that kind of capacity. And we found this challenge because, we're building more than everyone in this room who is data center operator and the people on the panel are building much, much more than they built last year. And they're going to build much, much more the following year. So today, for example, we are looking at 1.8 gigawatts of capacity that we have across all our markets. And we're building, in 100 data centers and building even more going forward. And that's a huge build capacity exposure that we have across all this. And I think the other thing that I feel that the sophistication of our construction partners, development partners down the line is not there yet. And for example, in India, we have to educate the construction industry. I remember 3-4 years ago, where there's no sense of safety. And that's common in countries like we are familiar with, but we had to set the standard for before we agree a contracting contract with any of the construction people, because life is cheap, and that's not acceptable. So setting that standard, and this past year we walked around with some of the builds that we had and talked to some of these partners that we have developed to this new high standard. They are so pleased that now they say that if they have the moniker of having built one of our data centers, means other people will say, okay, you have the standard now to build in this industry, because we have to raise these standards. And it's a responsibility of all of us, right? Because we're building so much. A lot of people are not used to the kind of build out that we are having. How do we ensure that the standards because if there are major accidents that happen as a result of us not building right, imagine the social license impact again for the community, on the rest of us. So I think this is an important area that we need to keep focused on.
So maybe just building on that, our initial estimates for the capital needed over the next couple of years just to fund the construction of data centers, fiber to the home, is over $100 billion a year in capital. And when we talk to customers of data centers, the things that they mention to us as reasons why they pick their vendors or their suppliers is really folks who have continued access to capital, ability to expand, ability to meet them where their demand is. It'd be great to hear from the panel just how you're approaching capital and ensuring you have access to the capital that's needed from your customers on a sustained and continual basis. Maybe Alessandro, maybe you can start just in terms of how you're approaching it in Latin America and Brazil, and where you're finding access to capital.
Well, Nick, first of all, allow me to remember what we did in early 2020. At that time, we were running a data center that we thought it was big because it was a 12 megawatt facility in Brazil, one of the biggest in Latin America at that time. It's incredible how quick has changed. And if you remember, we did our work together on strategy and market. So that was very important in order to be able to attract investors such as Goldman Sachs to our share capital. Very important. So the first thing is really to do a broad market analysis, not only with internal resources, but really understanding how the market absorption will eventually develop in the next years. It's very important to have a clear view of that. I have to say that we did some predictions that turned out to be very prudent, because we thought it was 150 megawatt absorption in São Paulo in 5 years, and now we had a quarter of 150 megawatt in São Paulo. It was the last quarter. So it's incredible how the market has developed in 4 or 5 years. So first of all, make sure that investors understand the market you are in, because they just don't, especially commercial banks. Very few have a committed or sophisticated team working on digital infrastructure, especially in Latin America. From our side, I understand that the most important thing is to be able to provide collateral. So signing contracts, or at least memorandum of understanding before asking investors to carry land is important. I found much issues in convincing investors to carry land, especially in Latin America, where you have interest rates at like 12 or 13%. So it's very difficult. So you really need to work together with your clients in order to be able to provide enough capital. Now, I'm really keen to hear from this panel. I understand that not we, but the market as a whole was not ready for the AI way in terms of capital. Nobody was. I mean, I was thinking of a certain amount of capex in the next 5 years is now threefold of what we were thinking 2 years ago. So we have to raise capital. So what we're doing is thinking about green finance, which is a solution to the problem you had, so democratizing the data center. So if you attach yourself to green finance, naturally you are seen as a positive actor or participant to the society as a whole, so green digital society. And of course, the other key point is get a link to the electricity grid. That's very important for finding any kind of capital. What people want to see, yes, but do you have the link? Not a possibility of having a link, not a link which is 10 miles and there is a mountain in between. And maybe some environmental agencies will need to accept that you're doing something in between. So having the link is also something truly important, because energy is needed, there's lack of it everywhere in the world, so who has the link to an available grid with power capacity will eventually deploy successfully its capital.
Yeah, I think if we don't have the money, we can't build. So I think attracting and bringing the right capital to bear, and I think it is evolving. The demand, the AI wave that we talk about, the capital needed to just look at it for the next 2-3 years. You know, Oliver made a great point about campus build-outs, returns now, forget about 2-3 years and hoping to flip and, you know, find a return. It's 6-7 years before you get a campus build-out in a way that can even talk about break even and start to really see the money roll in. And the velocity of your customer take-up has a big impact, right? A lot of customers sign base contracts and have all these upsides that they want, which means that you have to keep that capacity available for them, some reservation, etc. So I think the models are evolving as we speak. The investors, there's money available because there's a huge desire to be part of this wave. You know, both from the coming of the infrastructure as well as if you look at the GPU sector in terms of investments by the Corvives and the Lambdas of this world, they're looking to continue to fund that growth. And there is a desire to be part of it. Money is available. But I think the return thresholds, the kind of capital they need to bring to bear at different stages of your evolution of your data center platforms is going to be important to play with. So flexible capital, but I mean, if you look at all the funds that are out there doing this, they have mostly finite lifetimes in terms of funds, whether it's, you know, 5, 6, 7, 8, some have 12, but they also deploy the capital in a certain time frame. And then after that, they have to wait to see, but the money has to go back to them, returns have to go back to them. So I think we have to embrace this opportunity with partners who will understand these evolutionary aspects of this sector. Because if you don't, you get the wrong capital in, they want the capital out in a time when you have, I've just built 2 of the 5 campus data centers in this campus. So, and then it becomes a challenge for you to deliver and find other capital to replace, etc. So I think that's one of the interest rates have been a big impact to us, the way that changed. I hate to be somebody who's starting to build a data center platform in the last 2 years. So it's great that we've built it as long as we have and started when we did. So I think these are some of the real opportunities as well as challenges. Yeah.
Well, I would say if we talk about capital, you need to have the right capital sponsor and someone that has deep pockets, and is knowledgeable. Knowledgeable is very important because we used to be with AXA Investment. They have 850 billion AUM, which is quite big, but they were quite limited in terms of infra, and especially digital infra. And then when we came back to them and said, well, on an annual basis, we have good problems because we need to invest from 100 mil to plus 1 billion on an annual basis, then it was far too much. And that's why we have moved to a capital partner, Brookfield, that is investing a lot in infrastructure, plus 200 billion. And so it changed completely our life. But even if it changed our life because we are with a strong, large capital partner that knows what means infra and digital infra, capital is not infinite. Because every year I revise my business plan, I add plus 2, plus 3 billion euros, which is a good problem. But still, it's starting to be very big because, we are in funds, so data4 can't represent a certain amount of the funds in relative value. So that's very important to as well find new ways of funding. So I still like very much, the old infra debt. Unfortunately yesterday we lost price. Even if we raised 2 billion euros, we had Vantage who raised 10 billion euros, but very strong. But still, I like this kind of source of funding. And as well, we are thinking about new alternative. Why doing everything on our own? Why we are not opening, the projects, these large campuses with other partners to bring as well capital and co-invest with other players, because it seems that actually the market, you have brand new investors that are willing to invest in the data center, then why not, being quite open and do this co-development with new investors?
Yeah, I think time horizon is the most important thing in any of these businesses, and so we're permanent capital ourselves. We take a very long-term view, but whenever we partner with folks, I think the key is helping them understand that this isn't a 2, 3, 4-year journey. Typically, these are 10, 20, 30-year journeys if you really want to maximize value. So I think time horizon is important. I think capital is available. I think capital is available for prudent business plans, and I think the risk is over-exuberance, overpricing things, and then chasing growth and sort of undercutting the market. And we've seen that in kind of all of these asset classes over the years. So I think capital is there. I think there's always a mismatch between timing and sort of fund considerations and all of that.
Great. Well, thank you very much. I think that's it. Maybe 10-second lightning round. Just what do you think the biggest underestimated opportunity is that is out there to go chase in the next couple of years?
Building substations for data center.
I think power. If you can site your data centers near power sources, renewable power sources, you're going to win.
I fully agree with the guy on my right side who won the Global Leader Prize yesterday.
Award that you should have won.
I think finding more efficient ways to utilize energy, I think ultimately that's what's going to drive sort of the data center opportunity.
Great. Thanks to the panel. Thank you very much.
As always.